All right. Good afternoon, everyone. It's June 28th. We're a week away from 4th of July next week, and wanted to celebrate and remember to really just celebrate and safely at home with your friends and family. If you're doing fireworks or whatnot, just make sure that you remember that the whole purpose of 4th of July is to celebrate the American Independence Day. This is when America truly and officially signed the Constitution and ratified that to separate against the United Kingdom today, so the British. So just really remember that the whole America's fundamental founding fathers is principled about things such as freedom of speech, freedom of religion, freedom of the press, freedom to speak good and bad, freedom to bear arms. There's a lot of different things going on right now in our governments that are all based on fundamental principles that should be kind of universal, but not all people out there in other countries celebrate or have the freedoms and the privileges that we have here. So we're very fortunate, we're very lucky. So have that blessing in your mind as you see many other countries not having such, prevalent and rights for their citizens. It's important to know that. So now that we got that out of the way, you enjoy your holiday weekend with your family. Talk real estate this weekend. Talk about at your barbecues that you're going to be attending to, or your pool party, or whatever it is, because people need to know what's going on in real estate today. So today I wanted to celebrate and share with a few things that are newer, updated, very relevant content that will help you in your business. So today I'm going to cover a couple of changes in our contracts, disclosure law. I'm going to cover a little bit about tenant protections because July 1st marks a new change to the tenant protections. I'm going to talk about financing. And it's now time, with the conventional rates being very, very expensive and high for a lot of borrowers right now. Let's consider other solutions to our clients. If you're representing a buyer, there are ways to overcome their fear, the buyer's fear. Oh, I'm going to pay 6% plus interest rates, or 7%, which they predict it will increase again in July at the next meeting of the Fed. So let's figure out some cool ways that we, as realtors in the industry, knowing a strong pulse on what's going on in the industry and the market, I'm going to help you with some solutions to help for those of the borrowers. And if you're a listing agent as well, these are also great options to consider when you're trying to get the highest price on your property. So I'll give you some solutions to that. Any questions before I start today? Okay, let's go ahead and start sharing my screen. And again, this is interactive, guys. So if you find anything, I want you to really just let me know what it is that you want to learn more about. So let's first talk about, I have a little bit of updates regarding the market, the industry, and I'm going to go over Oscar Way, CAR economist. I'm going to go over his housing market update slides that were recently printed 4 days ago. So I'm going to share this with you soon. I want you to understand that there's a couple of different changes as well. So let's get into something out of the way right now. There's a new change to the fire hardening defensible space form. So I want you to share with you what is the new changes, and I want to share with you what its purpose is, how do we use it, because there's a new thing called a tree to help you understand how to fill this out. Beginning last year, July 1st, 2021, all homes that are in a high or very high fire hazard zone needs to provide some written documentation disclosure that's in compliance to let the buyer know if there is meeting within compliance defensible space laws. Now, this is because of all the high fires that we experienced in the last several years. We all know why. California was a victim of many wildfires. So if your property is 1 to 4 units, if it's a condo or PUD, it is in a high fire zone and you have a TDS requirement, for your transaction, this does apply for your sale and your transaction. So it's going to be mandatorily and updated in our own forms and disclosures. Okay. So we don't need to give a certification form or a compliance form while we're selling it. It's not a point of sale requirement. It is more like a duty from a seller disclosure. And they updated it recently in June with a decision tree. Okay. So I wanted to give that and put it in front of you. So before I put it in front of you, just letting you know, this is a step-by-step easy guide that's supposed to be given during the first 7 days by default during your disclosure period of the transaction. So what is defensible space? It's 100 feet of separation between your property structures and the spread of wildfires, that the potential harm. And that could be maybe other structures on the property. So there's different things of vegetation, plants, and they're going to require certain things such as remove high weeds or a lot of different types of materials on your property would be needing to be changed out. I have heard some cities asking them to change the glass of your windows to a tempered glass, to change the roof. If you might have a wood or shingle roof, you want to get a flame retardant material. I've seen people have to cut bushes and weeds and remove all the dead ones, so that the way there's not easy for these fires to spread. Very timely during the 4th of July, many people are lighting fireworks illegally and even in high fire zones. So when it's very hot weather and when you're lighting up fires, there's going to be some fires in California. I probably guarantee you there's going to be some houses that burn down during this 4th of July weekend, because there's really stupid people out there who are going to be not controlling their fire. So let's understand, the first thing where we should do is check the source of any property that you're listing and representing the seller. Let's ask your favorite natural hazard disclosure representative to tell you whether or not this is within a high or very high fire zone. And when I get into the transaction, I'm going to start sharing with you the forms. We have the revised, as of June 22, the fire hardening defensible space disclosure and addendum. Now, it's breaking up into part 1, part 2, part 3. Okay, so all you need to understand is simply first you just read part 1 and understand that this compliance only is required for those in a high or very high fire zone. So once you go into part D and you meet all 4 conditions, you need a TDS, you need as 1 to 4 units, then you have to answer the question down here, if only all of the parts of 1A are met. Okay, so if you are in a high or very high zone and your representative at NHD tells you, yes, you're in a high zone, then all you have to do is fill out paragraph 2 right here. Do you know, seller, do you have any eaves, soffits, roof ventilation where there's openings in excess of 1/8 of an inch? It's either the question is yes or no. So they have to disclose to the best of their knowledge, but they don't necessarily have to go and hire somebody to answer this question for them. You could probably ask the inspector. You could probably ask a contractor or any person to help you if you want to understand this questions. Does their roof covering made of untreated wood or shake? Okay, because these are flammable. Is there any combustible landscaping or other materials within 5 feet of the home, like maybe a barrel of oil? Maybe they're storing some materials that are combustible, like dry hay, because they have to feed some animals. So that's combustible if you have dry hay within 5 feet. Single pane or non-tempered glass windows, if you answer yes or no, that's just required to be disclosed. Roof flashings is loose or missing bird stoppings. Rain gutters that are not metal or non-combustible gutter covers. So you answer yes or no, okay? Now, that's simply what you have to disclose to the buyer so that they understand. You don't have to fix it. You don't have to correct it. The buyer needs to be aware that they are some protections that they should be needing to do, so that helps with their due diligence. Okay. Now, this physical space disclosure and addendum, paragraph 3 down here, is only required to be completed if all 3 conditions in 1B are met. Okay, if the property contains 1 to 4 units, sure. The seller needs to complete a TDS, yes, and it's higher, fair, very high. So if you have a TDS exempt seller, such as maybe I'm a seller selling 1 to 4 units, but I'm exempt because I am a irrevocable trust and I never lived on the property, I don't need to fill out part 3. But I did live in the property. I'm not an exempt person. I just need to say whether there is or is not subject to local vegetation management. Okay.
Excuse me, Kevin. Excuse me.
And so vegetation management, a lot of cities and counties do have a requirement in effect where they send weed abatement notices. That's a type of local vegetation management. If you have a vacant land or you have a lot of brush that's growing on your property, twice a year, they'll probably send you a compliance to correct your property to reduce your weeds to 4 inches or less. Okay.
Hey, Kevin.
Oh yeah, I had a question. Go ahead, Adam.
Yes, I don't see your disclosure.
You don't see the disclosure?
Nope.
Oh, okay. Do you see it now?
Yes.
Okay, thank you. Thanks for speaking up because I thought I was sharing it. My apologies. So if you can see here, this law applies part 1, part 2, and part 3 down here. So part 2 is it only if it belongs on all 4 conditions are met in paragraph 1A. Yes, you got to fill this part out. You're likely, unless they're a TDS exempt person, gonna also have to comply and share these areas here. Okay, so buyer has a responsibility. So they should stay and be in compliance with the laws within 1 year of their close of escrow date. Okay, so if they got to change out their tempered glass windows or they got to change the roof material, they have a year grace period from purchasing. And there's a local vegetation management ordinance in effect. I would just say this is the checkbox of who is going to be responsible. By default, it says buyer shall be the responsible party by default. Okay, so if you don't fill anything out, you should have it put it over here. And if your seller is going to do this compliance prior to the close of escrow, because a lot of them will send out the notices so that they're cleared on or before May and June deadline date, then you would fill out something separate down here. Okay. You can find out this information by calling and the local city. If they have a code compliance department, you can find out, or the county, you can find out where you can get these resources or answers. So here's the new part of this, the decision tree. This part here is only required for this if it's 1 to 4 units. Seller has to complete a TDS as a standard statutory duty. It's in a high or very high zone. And so if you have all of these conditions met, then just go ahead and sign and follow these steps below. Step 1, if yes, you are in a high fire zone and you have a local vegetation management, weed abatement type of situation, then go ahead. If the seller does not know, see the next column and find out. How do you find out? If I have a defensible space law, is there a local fire marshal? That's the way you can call CAL FIRE. They will tell you all the defensible space needs, or you can contact your NHG to find out if it's high or very high area. Okay, so to me, the fire marshal and CAL FIRE, they're the ones who are putting out these fires. They can tell you if you have a defensible crawl space requirement for your specific property address, and they'll tell you if there's a compliance department as well. So does the seller have the report prepared by an authorized inspector? A lot of times people don't have this inspector. Maybe in a few years, people will start doing this normally, but it probably you're going to be feeling out. No, seller does not have a report to share. So it applies, you go to 3B1. Okay. Go to step 3. Does a local law require compliance? And if you don't know, you go better find out. You can ask the fire marshal. So this is going to go ahead, check the box that applies. If it's a yes, you go to step 3.1. Yes, there's a local law requirement. 3B1, check 3B3. It's kind of like this decision tree. It's very confusing. So that's when you have to be like, for example, if you want to specialize in a North Arcadia, Foothills, Bradbury, you want to be in the Monrovia or Azusa, the mountain, Glendora, you want to be a specialist in those neighborhoods, you better learn these things so that way you can advise and sound better that you're a sharper professional. Go to a class on this, okay? Go learn these new forms, because I can tell you a lot of listing agents are going to be confused about all these new local law requirements and the changes made. So it will tell you where you are and how do I find out if seller obtained document. It's probably easier if I go to the Q&A now. So let's go take a look at here. The most common exemption where you don't have to fill this out, if you have a probate, REO, foreclosure, bankruptcy, some types of trust sales, whenever there's a TDS exemption, this form will not be required in the 7-day disclosure period. So is it required for a lease? No, you don't have to give this during a lease, even if it's in a high fire zone. It's for sales only. It does not require you to have a inspection report or certification, okay? Unless there's a very rare local point of sale ordinance that requires this. Most cities and states don't have this yet, but they may adopt some ordinances in the near future, okay? So is it a state responsibility area or a local responsibility area? State responsibility could be some things that are protected under state, like parks and state facility, recreational areas and all that stuff, wildlife. And some local responsibility areas, such as maybe Big Bear. I'm sure they have a local ordinance in there that they have to they adopt. So to comply, there's 4 ways. You simply just, buyer agrees to obtain the documentation of compliance within 1 year. That's one way to satisfy and comply. The buyer signs off that they will take a responsibility. If the seller has obtained documentation of compliance, great, then the seller already took care of it. And if you have a local ordinance in place, you know, you should probably ask them to send a report over or do a pre-sale for local ordinance. So that way you can at least do your duty of an agent to let the seller know this is a duty requirement. And let's share this with the buyer. Let's be ahead of this because we don't want to get sued later on. Might as well just get this report done for the client. So sometimes a local law may require the compliance to be done before close of escrow. Very far and few, but maybe a point of sale ordinance, a pre-sale inspection, or a lender FHA or a VA loan requirement might ask the seller to do this before to do a defensible case modification or improve a material is possible. Okay, you'll start seeing this becoming more prevalent as lenders' requirements become a little bit more strict. If there's no local ordinance, then just simply pass that responsibility to a buyer's agent, a buyer's buyer to do. Check the right box. So you can, there's different things going on, but anyways, if you fail to do so, the seller might get a fine or a notice to abate. So they might ask you to show proof, take pictures, and make sure you removed all the dead trees and plants. So if you have these possibilities and you have these properties, if it's in a high fire zone, just go ahead and just talk to the, there's a URL here to find out where the responsibility areas are, okay? And that'll tell you whether it's a local responsibility, a state responsibility, or federal. So let's just go ahead and pick one of our maps. And maybe if you guys want to see it, let's see if I can pull it up for you right here. Okay, so I'll show you what it looks like really quick and I'll move on to the next topic. So if you click that link, this tells you who has responsibility over that specific property. Let's pick some property in North. Let's do Sierra Madre. Sierra Madre has a lot of forest area. Now, if I'm a listing agent and I'm going to pick a property in the northern area, because I want to pick something that's in the high fire zone. Okay, so let's pick something right up over here. Let's see this one over here. So this address is called 9 Nathaniel Terre, Sierra Madre. I'll take that address. Do you guys see the online viewer right now, right here?
Yes, yes.
Okay, so I just typed in the address and it tells me that this belongs in the SRA. Okay, that's easily how you could tell. So what does SRA mean? I go back to the original website and there's a legend. That means it's a state responsibility area. The state has jurisdiction over here. There's no local ordinances there in terms of Sierra Madre ordinances. So we need to find out from the SRA state what are their requirements for fire hazard defense of a crawl space. So let me see what I can do for you here. I'm trying to show you what it would look like, but this is a high fire zone. As you can see, there's a lot of brush around. Okay. When you finish the defensible crawl space section, and you'll find that this is a high fire zone. You can call Cal Fire, ask them what, you know, in this situation, it's land. So when you have structures, there's different protections you're going to have to place on. When you have land, you probably just have to keep the clearance of the brushes on a certain level. There's no structures to protect. So that's a one detail too. Okay. So how do you determine if there's certain local ordinances? Again, this is your best situation or sources that are CAR recommended to check. So when you go to the Cal Fire website, they could also give you this ordinance. So you don't even have to call your NHD rep. I just go to that Cal Fire website. And if I take that same, it also has it here, state responsibility, federal responsibility, such as Santa Anita, the hiking trail up there. So you go ahead and just type in an address in here. If your property falls in the yellow, or if I put in this address right here, let's go back over to that. Sorry, guys. Here it is. Red. These all areas in red definitely are in a high fire zone. So if you sell any property north of Grandview, which is north of Foothill in this area of Arcadia, Monrovia, you will have many, many areas that have high fire zones that are going to have this requirement. Okay? Make sense? And these are all the properties that are going to have very expensive fire insurance policies as well. Now, spending a little bit more time, I want to go over the next section, which is one minor change. So we all know there's a decision tree, which is supposed to help a seller and complicate things for the agents on how to fill out the FHDS properly. I want to show you the RPA. There's one new change that you should be aware of. And in the RPA, there's a new form added in here, and it's regarding appraisals. So automatically attached, it's going to let the buyer and seller know that there's going to be an independent appraisal conducted that's fair, that's not going to use anything like discrimination, race, color, religion, this and this and that, to affect the value of the property. Appraisers are supposed to follow a very strict guidelines when they measure, when they do the appraisal, when they conduct the comps. So if there is any feeling that the buyer or seller, that the appraiser was influenced by anything regarding, for example, religion or family status or sexual orientation or anything, if you felt that they were getting an unfair appraisal, you can call this number and report the appraiser and ask for a reappraisal from another party. That's something that could save your deal. So that's it. There's a new form in here. Just have the parties go ahead and comply. It's treated just like the CCPA of California that has to tell the buyer or seller that what kind of information we're collecting against them in California. So just go ahead and just sign it. There's nothing we can do about it. All right, going to the next topic. Let's go over the changes to a lot of I'm going to skip the lead-based paint portion. There's one change coming on July 1st. Okay. How many of you guys are aware of the phase 1 and phase 2 of the of the LA County eviction moratorium for tenants? And if you are aware of it, you guys know that July 1st marks another significant point in time that makes it a little bit more favorable towards the landlords. So just want to let you know that as of July 1st now, there's an expiration of the requirement that landlords show proof that they filed for emergency rental assistance as a condition to obtain a judgment for unlawful detainer. Okay, what's an unlawful detainer? That is a eviction, a step towards eviction against the tenant. So prior to this date of July 1st of 2022, what it means is the landlord would have to show proof they attempted and tried to get rental assistance from state funds. We all knew this as the free money of getting 80% of the delinquent rent. So prior to getting an eviction unlawful detainer recorded against a tenant, the landlord was supposed to show proof that they tried during the period of March 2020 to March 2022, when the funds were available to collect the free money. Now, I can go ahead and proceed to file for an unlawful detainer eviction against a tenant without any requirement for me to get the first source of solution, which is the state funds. Obviously, because those funds are gone and exhausted now. Another change, the Recovery Act for tenants did demand that the rent was delinquent from October 1st to March 31st of 2022 to include certain specific information. How much was there behind? How much was provided during emergency rental assistance? They had to give these additional notices when they were sending a 3-day notice to pay rent if they were served between the period of time right here. Just letting you know that as of July 1st, this requirement for additional notice languages no longer are required. So go ahead and fill out your 3-day standard notice that to cure or quit, and you don't have to give the additional legal protection notices that previously were required as of in the past. Does that make sense? Now, if they were subject to the unincorporated areas of LA County, these rental ordinances protections. Now, if they were state preempted period expiration, this is talking really regarding the Tenant Relief Act called COVID-19 Tenant Relief Act. When they passed this, it allowed tenants to delay their payment of rent based upon a claim. Anything reported to the landlord, we have difficulty, we lost our job, we had reduced hours, my spouse is not employed at the moment. These are all COVID-19 valid financial hardship letters that people gave to the landlord. If they provided this, once they passed this, it basically just says that such as the City of Los Angeles properties, whichever one is stricter shall be locally, or the statewide one shall apply. So now the local rent moratorium is due to expire on July 1st. Any city or county in the state will be free to enact their own moratoriums. So when the state one is lifted and expires, now only the local jurisdictions as of July 1st may revise, adopt new ones, enact new rent moratoriums in place. They can create new zoning for restricted rental housing. So these are things that you're going to start seeing a lot more local jurisdictions putting together rental ordinances, trying to keep affordability in certain areas. And obviously, like LA County, we all know, Los Angeles City, I'm sorry, they already have these very, very strict ordinances in place. And they're going to be, you're going to see a lot of that spreading in many more cities in the future. Okay. So any questions regarding that? Just letting you know of those two changes. Let's go ahead and talk right now quickly regarding the slides of Jordan Levine's economic update. So like I told you before, I want to cover a little bit about what's going on in the marketplace. So let me go ahead and refresh this. Do you guys see the CAR slide right now?
Yes.
Okay, it's pulling up a PowerPoint. So hopefully you guys see it right now. Yes, the PowerPoint. Okay.
Yes.
Jordan Levine. I mean, this housing update is relevant to California. So you'll have regionally showing the California changes of going on. As of May, this is the end of May is the most reported and updated statistics. Home sales are showing a 9% year-to-year change. There's less sales going on right now as of May than there was 1 year ago. Okay. If you're talking about the number of sales, you'll see that the number of sales year to year is also down 15%. Price is still showing a year-to-year increase. We have roughly in California 2 months of unsold inventory. You can significantly see 16% more inventory than it was just a year ago. Right now, 9 days on market is a little bit higher than it is a year ago. Before last year, things were flying off much, much faster. When we see pending home sales and tracking them in all of the MLSs in California, Pending sales started to show a decline as of April and May. As you can see here, a drop off in sales activity, right? And that coincides strictly towards exactly when mortgage rates started escalating quickly. Mortgage payments grew hit a new record right now. As you can see in these graphs, the prices have grown roughly 9.9% year over year, like you can see in the blue line, but the light blue line is showing the mortgage payment growth. So mortgage payments really peaking right now, the greatest difference between that and the median price. So we're at an all-time highest unaffordability time than ever before. Okay, we're at the most unaffordable period of time ever in the last 6 years, if you can understand this graph. One thing you want to show you is important to differentiate prices and activity based upon the price point, because obviously you can see affordable homes will sell much faster. Luxury $5 million homes are going to take longer to sell. So what is this saying? Well, upper price segments are really moderating in recent months, the $1 million plus homes. So what you can kind of see here is the 2022, 35% of the homes were sold at $1 million plus. And there's not too many properties under $499. So there's more of those sales that occurred in 2021.
Hey, Kevin, we did not see any graph.
You don't see the graph?
Nope.
Okay. Let's go ahead and share that screen again, hopefully. Do you see it now?
Nope. It's
No?
only say the PowerPoint, California housing market update. That's it. The
Yeah,
front page.
we didn't see anything, only 1/6 page.
Only you, Julia.
Yeah,
Only you.
that's why, thank you. I need to figure out why it's not sharing that part.
Mm.
Do you see it now?
Yes, right now, yes.
Upper price segments?
Yep,
Yeah.
upper price segment, Maria.
Okay.
And
Upper price the segment.
Okay. So this is the previous graph. I just wanted to, this is more important. This is really showing you price growth. And as you can see in 2016, prices have been appreciating roughly 5 to 10% consistently. 2016, 2017, 2018, always showing price appreciation, except for maybe in 2019, slightly just didn't really appreciate too much, but quickly at right prior to the pandemic, we're starting an upward trend where prices showing dramatic increase right after people started the eviction moratorium. People are Zooming at home, not working. Everyone wanted to buy their own single family or have their own yard. You've seen tremendous price appreciation, closer to 20% around here, all the way to 30 to 40% price appreciation of the median price. Now, it's 9.9%, it's leveled off. But what the blue line, light blue line represents here is housing affordability. These are the mortgage payments associated with these growing prices in California homes. We're at the greatest disconnect, the greatest mortgage payment right now than we've ever experienced in the last 6 years. This is the one that I wanted to show and highlight. May is going to be even a stronger disconnect. It's going to be even higher, maybe 50%. Okay. Does that make sense? So as you can see here, I want to share that $1 million homes. A lot of our homes in Temple City, Arcadia are over $1 million. They reached the highest number of levels of sales of all time because, yeah, there's been price appreciation. So what's important to show is of May 22 to 22, we're seeing 35% of the sales now, a largest segment of ever before. For example, just prior to the pandemic in 2019, $1 million home sales was only like 19%, 18% of the MLS sales. Now it's greater. 35% of all sales are $1 million and up. Okay. And lower price homes were mostly the predominant factors for the last 2 years. They were 40 to 50% of all the sales. Now there's no homes for sale that are under 500,000. That's probably why. And now this only represents 22% of MLS sales. We're showing a decline in percentage of sales as well. You can see here, this is the volume. All right. We are now at a slow point. Active listings had back-to-back double-digit increases. Okay. So this is your supply of homes, year-over-year percentage change. And back in the pandemic, you could see a shortage of inventory. This is showing that during 2020 and 2021, we had -20 to -40% year-over-year supply of active listings. Typically, listings peak around May, June, July, because the summer months is when peak activity happens. We had a shortage. That obviously is why and explains people were willing to pay 200,000 over asking price because there was not many inventory to sell. Guess what, guys? As of March, you see a significant uptick of 20% year over year. Now it's 47% year over year, double-digit increases of more inventory to sell. We have a lot of supply on the market right now. Shares of homes sold above asking price, typically, many of them, if you see here in 2020, 2021, 70% of the homes were selling above the asking price, okay? And last month, April, we're starting to see 72, 70s now downtick. So next month, when I look at Oscar Way's slides, I'll show you May and June is not going to be, it's probably going to be much, much significantly lower over around that asking price, okay? Pricing properties staying on the market, slightly longer, yes. So we're seeing uptick down here that days on market is climbing. In 2020, 2021, it's been the lowest days on market in ever history for the past 12 years, okay? So we're gonna see this escalate much higher very soon. Inflation is taking a toll, yes. As the prices of everything goes up, goods, services, oil, gas, all blah, 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 we're seeing that these are causing significant reductions on consumer spending, okay? So I just, you're seeing those trends. Recession is on the risk. They are saying that the job market is showing some signs of cooling down. So this is the recession probability. We had a very high probability of recession in gray during 2008 and 9, right here. 2020, we were pushed towards the same trend of a recession, and we're starting to see another spike right now. At the moment, it's a very 40%, greater than 40% chance of recession. I probably think this is a lagging indicator. We have more than a 50% chance of a recession. And these are job claims of loss of job. So we're starting to see a spike of unemployment. So we're projecting in 2022 a GDP of 2%, unemployment to remain somewhat low. That's a good thing. But guess what? The consumer price index, this is a huge fear that it's 7.6% inflation. And I think it's even higher than this. So when you relate this compared to the amount of jobs, the inflation is outweighing the growth of wages. So that's telling us that people, families, household income has a negative percentage change, even if they got a raise, a 50-cent raise or $1 raise on their wages per hour. Negatively, this is a negative change to disposable income. So we're not having much of a population growth. Everything is kind of stagnant. Mortgage applications, you can see here that in 2022, we are showing a very downward trend towards mortgage applications, especially in May. Borrowers have exited the market. The average 30-year fixed rate is near basically 6%. And these are the dots of the Fed. So if you look at the federal funds rate, many of them are projecting closer towards a 3% to 3.5% target rate for the federal funds rate. Okay, that's higher than before. Sales expected to slow as we approach the second half of 2022. So if you forecast down here, this is what they project as the number of sales in terms of CAR economists. They project this. This is not real factual. This is what we are trending towards. And we're showing that there's going to be a year-to-year decline in sales under what we sold last year. Okay, median state prices will stay elevated because, again, they're going to say that we're going to have modest appreciation. That's what they're targeting. And so if you look at things here and here, that's really what the end of the slides I wanted to share with you, just to give you a market feel for what's going on. I have one other important thing I want to talk to you about. It's called financing. Any questions right now before I talk to you on the next section? Okay, so we covered a lot. I'm going to go ahead and share with you now the next slide. I want to explain to you how we can solve some of our clients' fears, okay? And let's talk a little bit about conventional financing versus non-conventional, okay? Conventional financing, what is it? Conventional financing typically is where the bank, lender, Fannie Mae, Freddie Mac, set together guidelines for all mortgage brokers out there. We, the federal government, will purchase your loans as long as they meet our guidelines. The borrower must have a first-time buyer or it has a 20% down, for example. And our conventional program, if you want to sell it to us, we will purchase it from you. Just conduct the application, stay in compliance. That's why they have the underwriting department always asking for conditions to be met. So if you sold any home, the lender is going to say, we need to fulfill 4 of these conditions, provide an updated verification of employment, get a work letter or an explanation letter for gift funds. Oh, we need to get a source of income for this transaction in your bank account. What we need to answer this explanation. So whatever it is that your conditions need to be met, that's because this lender you're working with or your buyer selected is planning to send this and sell this to the secondary mortgage market, Fannie Mae, Freddie Mac. Now, Fannie Mae, Freddie Mac, they will purchase every 100% of all of these secondary on the secondary market. They'll purchase all of these loans and resell them to third-party servicers, debt collectors such as Flagstar, UWM. One of the biggest ones is Citadel Servicing. So anyway, whoever services, it doesn't really matter. They have a note. They have a duty to collect this payment from the borrowers who have a promise to pay off their debt. So when they sell it to the Fannie Mae, Freddie Mac, they call it a conventional loan because all the guidelines are already underwritten, already vetted out during the sale process. So they will have 0% issues selling this to Fannie Mae, Freddie Mac on the secondary market to a new servicer. They will have no issues selling this out. So that's why you see lenders really at the last continuous removal period, really pushing to get the file underwritten and reviewed with conditions outstanding. And then they'll tell you, we can meet these, we can do these within time, or I don't think we're going to be able to get these conditions met. I can't prove this, or your ratios are way out of whack. I need you to pay off your car in order to get your ratios in order. There's different things that lenders do in order to make the numbers work. So that way they can easily sell it to the Fannie Mae, Freddie Mac secondary market. Now, there's another product that we need to understand because most of the buyers only think conventional is the best product. Technically speaking, it's circumstantial. So as a broker and an agent, I'm telling you, No, it's not necessarily is the best product. Everyone has different circumstances. Maybe people have a situation, or maybe they have a different risk tolerances. Maybe they expect future income to grow, whatever the case may be. Maybe there's other products out there that are better. So I'm going to put together a couple of non-QM products and give you a discussion towards them. First of all, depending upon your client's income, and before even exploring non-QM products, there's some other things to consider. One, I can go over a product called 15-year conventional loans, 40-year conventional loans. Now, if it's a problem about the monthly payment is just simply very close to being too high, instead, I can just apply for a conventional 40-year financing loan, where that will bring my ratios all into order, and I can get my loan approved simply by spreading out the debt over 40 years. Yes, you're going to pay more interest over time, but I would say 80% or greater of the 40-year conventional financing products, they're never going to fulfill that 40-year term. By that time, they've either sold the property or restructured their debt with a refinance. Okay, so no one lives that 40. No one will probably, very less than 10% will probably meet that mark of a 40-year loan. So, but again, it gives them and meets the LTV ratios or meets the monthly payment based upon their fixed income that they have with their W-2 employer, and their W-2 employer is not giving them a raise, right? They're going to keep the wages the same. If there's no forecasted increase in the wages, we need to make the payment spread as one solution. Another idea, obviously, is to increase your down payment and get gift funds from a family, friend, or a person that cares about them. Gift funds are another way to bring down your monthly payment to a lower threshold. Hopefully they have a friend that can lend them $80,000 on the purchase. They can have their own separate payback promise to that gift fund lender on their own. Now that's private party, right? Now, let's go into a few non-QM. Non-QM is non-conventional. Everything else falls into this category. 2005 to 2007, the peak in all of these crazy buying activity was because everyone was doing non-QM products, stated income loans, and people were not really vetted out, not like today. People are very well qualified when they purchase a home today. Even if they're paying 200 over asking, they've been vetted out and they have the income. So it would take them a loss of their job or some sort of tragedy in order for them to be not qualified anymore and to lose their home due to foreclosure. But at the end of the day, most of these products here are focused towards different scenario people, business owners. Even if there's a negative business, there are solutions. These are geared towards people who have low down payment. These are geared towards people who are very borderline from not being able to qualify for conventional. These are also geared towards foreign nationals, people who have who haven't built great credit over time yet. They haven't had a lease. If you lease a car, that's one of the greatest ways to build your credit, guys. So a bank statement loan is for self-employed borrowers. One of the programs here we can offer to our clients is, hey, you're self-employed, you ride and drive Uber part-time, and then you sell real estate part-time. Okay, you're a self-employed person. We can use your bank statements to get us 90% LTV ratios with no PMI included. And I don't need a P&L or a tax return from these borrowers. Do you know how they, I'm just going to tell you as a broker, I'm telling you, I know this loan because I was trying to get one. All they look at is you show them your bank statements. They're going to look at all of your deposits and all of your expenses. And hopefully you will show that you have more deposits than debits. Okay. So I don't have to provide a P&L of my business or a tax return. It could pop up in the underwriting, but typically as long as your bank deposits exceed your debits, they'll use that formula of excess in order to qualify you for what the maximum loan amount you can get. The next program is called the 1099 program for self-employed borrowers. Similar, has no mortgage insurance. I don't need to provide my 1040 self-employed tax return. And so what I look at is, instead of looking at your deposits like a bank statement route would look at, your checks that you cash, they're going to look at your 1099 for your last maybe 2 years and average that out as your income. So if you get a lot of 1099s, then this will be a great route for you, like a realtor. If you have a lot of 1099, you take all of them, divide that by 12, that's your monthly income. They're going to use that as your ability to qualify for your ratios on what your maximum payment can be. So very simple. So if you had a good year last year, this would be a situation. A lot of people had a great year in real estate. You probably want to explore this program if you want to get financing and you're a business owner like yourself, independent contractor. There's been a big buzz in DSCR program. Personally, I've used this myself. The DSCR does not even use any debt to income calculations. They don't look at any of your debt. They don't look that you have 5 different rental properties, or that you look at this and that. This is designed specifically for investors. They can give you a loan. This probably requires 25% down payment as one of the eligibility requirements. And if you put 25% down, that's sufficient equity. They're only going to look at the remaining 75% that you borrow. They're going to look at the potential rental income of that property. And they will conduct not an appraisal value of the property value. They're going to, well, they will. They're going to appraise the property value along with a rental appraisal. It's a little bit more expensive when you do this appraisal, because they're going to also check for the rental average and median rental rate for the specific property, what this will rent for in the open market. And I got approved for this DSR program for my own loan. So I got a 2,100 square foot home. I got the, I told them what the address is. They can calculate what a 4 3-bedroom home would rent for. And they will use that as your monthly income. And then they'll give you a loan for investment property very, very easily, quite frankly. Another program, for nationals, they'll give you, as you put 25% down, they can use 75 or greater. You can do a 75% loan to value ratio. And if you have no visa, you could close in an LLC. So there's certain, because the LLC will eventually end up paying for the property in California, limited liability company in California, registered company. They'll end up paying the taxes that way. So if they have no visa, no problem. We can still get them qualified through this program here. If they have an ITIN, great. They are a foreigner. They have already been here for a while. They've registered their business and a taxpayer's ID number. So then you can also qualify with the same 75% LTV ratio. If you're a non-permanent resident, they'll give you an 85% LTV ratio. These cost points, guys, don't forget, these products are designed and they're more expensive because these people over here that are foreigners or non-permanent residents haven't built strong credibility in their credit yet. Condos, even if you're not in an FHA approved community, there are many ways that we can still get financing for, it's called a spot approval for a property that does not meet FHA eligibility guidelines for the entire community. We can still get an FHA financing for this low income borrower as a spot approval. They might have to, a non-warrantable condo, they might have to put a little bit more ratios higher here. They have a full doc program. So if you provide 1 year of full document program, they can give you 80% LTV ratios. 40-year fixed rates are also becoming a lot more prevalent. And here's the last piece of advice for a lot of you guys that I can share with you for alternative ideas or financing is, this is the script to use. Hey, buyer, look at what's going on in the inventory market right now. Okay, I get it. I get that the real estate mortgage payment that you were looking at is very, very expensive. So let me do some quick calculations with you and show you what kind of differences we're talking about. So I'm going to go ahead and do a mortgage calculator.
Calvin, which lender can do that?
Which lender can do what?
Which lender can do 40 years?
Many lenders can do it.
For this
It-
40 years, 40 years fixed rate. So
Yeah.
now rate is so high. Who do 40 years?
I'll send you their information offline if you want this specific person I got it from. I'll send it to you.
I think
but-
that is AAA.
Yes,
I got it too.
many people can do this though. A lot of people have 40-year products. If you're doing with a wholesale lender, they have it. Okay, so let's take our region. Let's just do a $900,000 home. Okay, and let's assume this borrower is going to put 20% down. Okay, so I want to show you a quick comparison, and everything depends upon the interest rate. So this one doesn't have the interest rate calculator. Let me go ahead and give me, I need another one. Okay, I'll just do $1 million. It's easier for us all to understand.
No screen share.
Okay. Now, let's take a look at the screen share. I'll start sharing my screen and you guys will see what I'm talking about now. So we have $1 million home, right? 30-year fixed. If they're getting qualified at today's rates, let's say 6.5% or 6.25% with a 20% down payment, let's take a look at how their monthly payment is going to be. On an $800,000 mortgage, they're going to pay $57.52 per month, right? Okay, $57.52. Now, for those of you asking about 40-year products, okay, this one doesn't have it, but I'm going to tell you that there's a 40-year will be lower than this amount. I guarantee it. Now, yes, we cannot change the mortgage interest rate. We might not be able to change the buyer's down payment, but we could probably get them a better deal. Simply, if you take that same situation, the same buyer who is looking at $1 million home, what happens if we get 5% price reduction? So we get it at $950,000. Okay. Previous to this, it was $57.52, right? Now let's calculate it now. It becomes $54.07. Okay. So when you lower this price, it brings down the monthly payment for 30 years down to $54.07, correct? Now, what I'm trying to explain to you is this $1 million home that has a monthly payment of $57.52 today, during this high inventory market, it only takes one home that your client loves. Your client, with your representation and you tracking the market and your strong negotiation skills, you might be able to find a seller that's willing to sell this property at $920,000. Okay, maybe an 8% price reduction. Okay, which will bring their monthly payment down to a much lower. It used to be $57.52. Now it's $500 less. 500 times 12 months is $6,000. Okay. $6,000, when you spread $6,000 a year and then let's say they live there for 7 or 10 years. If they live there for 10 years, that $6,000 becomes $60,000 worth of savings compared to that $1 million home. If they were to buy it long time ago. So what I'm trying to say here is you could play with numbers so much, but when you do a 5-year ARM, okay, like here, you could still get rates right now at 4.5%. Okay. If you do a 5-year ARM at 4.5% with the same down payment, I don't even care if you pay $1 million. You can see it used to be 4,300 at 920. Now it's only 4,750. It's not that much higher. I can still pay $1 million, get the home I want. My mortgage payment is much less than if it was a conventional loan. All I need is to hopefully find a climate that within the next 5 years, if I believe the market will recover and rates and government will stimulate spending and have a better climate for businesses and homeowners, I could just need to refinance and find a time in the next 5 years. You could do a 7-year ARM, and that will be a little bit more expensive if you want to. You could do 3-year ARMs. There's different things that you could do. But the cool thing is, right now, today's mortgage rates in California, a 5-year ARM is actually probably going to be, last week it was 4.38. Now it's 4.8. You've seen a lot more people move towards this product. If you want a 7-year ARM, you're going to use 5.2% right now. Okay, it gives you more time. So you can see what trends on mortgage rates are happening right now. You can see everything is just going up for the past month and a half. But at the end of the day, some people are only looking at investing and living here for 5 years. They're going to sell it anyways. They know they're not going to be here for that long, or they know they're getting a good deal and they just need to be able to hit the payment. But they factor that maybe in 5 years, this home is going to be worth a lot more. Whatever the case may be, I know the best thing you can do right now as a realtor for these borrowers, you can negotiate these prices down. Why do I know this? Is because I looked at the inventory recently, and if you go into your CRMLS, someone tell me a city, any city.
Arcadia.
Arcadia? All right, so I'll log into Arcadia. So if I want to search Arcadia and I want to follow the market in Arcadia, I'm going to tell you what areas I'm looking at in trends to signal whether the prices are going up, prices are going down, or staying flat. So when you search, I can go ahead and pull in all the coming soons and actives in the city of Arcadia, and I'll show you what the heck I'm looking at right now. First of all, I'm going to sort. I want to show you this quick figure. The first thing I look at, how many listings came on the market in the last week or two? You can see here from just the last, since the beginning of June, right here, we have 48 listings coming on in just this this period of time right now. There's 48 property owners want to get their property sold right now. And that's a lot. Look, just in the past week, that represents that's half of them already just in the past week trying to get their property sold. Okay. Then I look at a couple of different factors. I could look at price per square foot to tell me where value is at. And I can tell you right now, the best property that's probably the best value. This is a beautiful mansion right here. They're selling 22,000 square feet home. This is Robert Tong's actual estate, and they're selling this crazy altogether several parcels. So you're getting several homes. Okay. So you have several properties here. That's an outlier. Let's take a look at the next one here. This is the next best priced home. At only $426 per square foot, you can get this giant, this condominium. It's probably not in great shape, but it's not bad. You're paying only $528,000 for one of, this is probably one of the best priced homes on the market right now for a condo. It's affordable. So is this one here. Now, it might have a high HOA, but we also have another listing here. They're only asking $450 a square foot right in the Mayflower Village area. That's not bad. This is an easy way for you to send your clients. One of these ways is to just check your listing, check the neighborhood, and check who has one of the lower price per foot. Because you're gonna now, I don't want to send my client 100 Arcadia homes. Okay, so you want to filter the results, be more, target, 2 million or less, or whatever it is that they're looking for. And I can filter this right here. Then I want to show you something completely opposite. These are the sellers that have the most longest days on market right here. Look how long some of these sellers are holding on to their value. And I want to see if they've reduced their price or not. So you can see here, a good number of these people reduced their price. If you search it from a different section called residential detail, you can see a better detail. Let me show you a secret. I'll just keep it to $3 million homes and less. If I do that same example from here and I reverse the days on market, okay, you can see how these up, down, let me see here. I'm going to show you there's a way to do price change on here. Oh, here are the settings. There's a couple of different views that you can do. If you wanted to add any fields over here, you would use the setting tab to set and manage your displays. So what I wanted to show you, how do I find that button? I think it's right here. Okay, here it is. Okay, so I push the sort button and I can sort by any of these, like age, square footage, price, days on market. This is what I'm choosing to sort. Okay, but if I wanted to sort anything else, I can sort by commission. I can see who's paying and offering the highest commission and add that as an area. But I'm going to show you one thing that I love to always use. So Price per square foot is one of them. Original list price is a nice one. Okay. So if the original list price is nice to show. And I might want to sort with,
Kevin, can you enlarge the screen? We cannot see how you do that.
how to, do you guys see this or no? My MLS?
But we don't see where you input the information to short.
Okay, there's a button here called sort. And I don't know if it pops up or not. Do you see this?
Yeah, right.
Okay.
now I see.
So I can try to, I mean, for me, there's so many different things. There's 100 different fields here, but I could sort by co-listing agent or cumulative days on market. And I like having days on market always, but I could go by expiration dates. Okay. So if you're a listing agent that wants to contact expired listings, I'll give you one story right now. One of my listings of my relative just expired. They got 100 phone calls from agents calling, hey, do you want to list your property? I see your property got expired. Why don't you use me and my tools and my technology? I can get your property sold. Let's set up an appointment. So you have cold callers right now. There's one simple expiration of your listing. This seller will get bombarded by other realtors. And you need to prepare your sellers who don't expect all that phone calls. But right now, agents are very hungry because just like yourself, you're probably not as busy as you were last year. Right now, it's slower. There's not as much buyers, but you should be going for sellers. You should be going for listings. And if you are doing your practices that we preach, contacting expireds is one of the things that you should do. So instead, I might go ahead and look for all the expireds in Arcadia that are single family and search them. And what do? I can go by expiration date. And I can sort by when they expired here and there, or this and that. There's a lot of expireds. So I just telling you, I gotta limit this. But I would go ahead and call all the expireds and try to ask if they want to relist with somebody else, like our company, who maybe have been doing better. You could tell which ones are bad and good, right? So if I'm trying to tell you what's bad and good, let's go ahead and look at residential detail expires in the last 180 days in the city of Arcadia. Now, if I were you and I'm going out to prospect, this is what I would do. I would, you could try to have a different approach. So this one just expired in June 25th, 140 days on the market. And I'm gonna go click over here and find that this is our listing, okay? So Winnie had this property for sale. It was 1.19 million, never got sold. Assuming it's not our company listing and this was an arm's length, you would probably have to do one thing, okay? You say, I would number one say, look, I'm an agent, I can take better photography. I'm an agent that can do a better description. I'm an agent that knows how to sell. What are the good points? Because it is a Temple City schools and Temple City is very hot, right? So what am I going to do? If I wanted to prospect this client, I find out the property address, I have it in front of me, and I see the owner's names, right? Okay. I also see that this is a rental property. The tax address is not the same. So what I could do is just go ahead and go to Fast People Search, like I've always taught you in the past, to find out how do I contact and call this owner. So I can type in the property or the address. In this case, I'll just take the address. I already know that there's a whole list of them. So let's just take 758 Hampton Road in Arcadia. Now we'll just go ahead and do the same one. 9420 Doherty Road. $94.20. So simply by just going to the reverse prospecting, I have a couple of things, okay? As a realtor, I know who the property owners are. It's a person named Wen Xiaohua and Johnny Lee. The problem is they don't live there on the property. You have tenants who have a current home address here. So I know that there's a 55-year-old. I know the tenant's phone number right here. And I probably also know this and this and that. When it's a situation where you have a non-owner occupied property, I want to go by the name. And so let's just take this name right here. Go back to Fast People Search, search by name, and I'll do Arcadia address, or I'll take their Maxon Road at 91732. So this guy lives in 91732. They live right here. .5033 Peck. I want to make sure it matches Maxon Road. Johnny Lee Xiaohua Wen. This is the person. See, Chinese people, it was hard to tell where is their full name or last name, but I did it now. So this person lives on Maxon Road, and I found their phone number right here. So if you were contacting expireds, boom, I have the property address, which is right here. I know the details and the layout and everything on the property and what they were asking in the past and how long it was on the market. I'll have a strategy that I'm going to come up with to contact and prospect this client to get it sold. So I'll call them. I already shown you the phone number, and I will try my best to ask them for an appointment. That's all you got to do. Do this. If you want to focus in any city you have right now, every city, you're going to find at least 20 or 30 recent expireds to work with. Okay. And all of these expireds here, you know, I can look at and see who's not local. Boom. This person right here listed NP is not a local agent. Okay. This is an agent who was working right here from Coldwell Banker Realty in a 949 zip code area. Okay. So probably Jing brought this along to Tim. Tim's listing this property, but guess what? This person is not local. They don't know the intricacies of and the photography is not that great. This is a good home, but the photography looks kind of dark and whatnot. So maybe my strategy in this particular situation is you need a local agent to sell this, Mr. or Mrs. Seller. I mean, you have nice pictures, you have this and this, you have a great property. I'm so surprised that your property hasn't sold yet. Maybe you should consider working with a local company like mine. And I would ask them for an appointment, let me price it for you and do this and this and that. And then if they hang up the phone on me, that's fine. They don't want to sell. Maybe they're still thinking about their options. Okay, boom. I got another property to call. It's 1632 Watson. So I'm going to go ahead and go call this one, get the owner's name, get their address, go to my tool right here that I showed you. I'll go ahead and look for these people's names and addresses on Watson Drive. This sounds like they are the people that occupy the property as husband and wife. And I'm going to ask them for the business to meet with me because I can tell you they had 2 months on the market, didn't sell. And then, you know, this person here might not be very local either. It's a small company. Okay, maybe he didn't work that hard. Maybe he says, you know, his showings was very difficult to do. Maybe it was not very good description. Okay, so whatever it is, you can kind of talk about what you're going to do better, and these people will want to hear from you. So I would target whatever it is I'm targeting. Citrus Valley shouldn't be selling here. You have TR, that's Tri-County of real estate realtors. Arcadia, West Angle, these are local. Here's RS. I don't even know where RS is, but this guy's selling an Arcadia property from a 909 phone number. That's kind of more Riverside area, right? So a lot of these small companies, mom and pops, they don't work hard on their listing, but you have a list of 53 homes here just in Arcadia. You can go start calling today. Okay. If they tell you, this is my last final piece of advice. If they tell you that the property is already listed, they know a realtor, they're going to report you for the do not call list, just say, I'm sorry, I don't see your property listed, but if your property is currently listed or you're already talking to somebody else, you know, I'm going by the MLS records and it does not, whoever you're working with does not show an active listing right now. So you just apologize, be professional, be courteous. Don't get yourself in trouble with do not call lists or marketing and calling all these people because they will report you. If there's some angry people that say, how did you get my number? Because they don't know that you used a tool like this to find their number directly. All right. This list here does not filter the do not call list. Okay. You need to filter that yourself. That's your own responsibility. Any questions? So I hope this gives you an idea of
Can you
what
go
you
back
could
one
be
more
doing.
time how to find the people?
All
Where
right,
is it?
just you tell me the property you want me to find in this page, Jean.
Oh, the first one. Yeah.
La Sierra.
Yeah.
Okay. This is an NP. This is an outside realtor. Yeah, definitely. Let's go attack this one. Let's go ask them if they need our help. So I'm going to take their name. Xiao Shengjiang is the male owner name, right? I copy. I go to this website, fastpeoplesearch.com, type in the name.
I see.
And I type in Arcadia, California. Boom. This person has 355 Palm as their address.
Oh.
Let me see here. Does that match? No, it does not match. This person says 49 La Sierra as their address. So I need to keep going. If they don't have 49, it might not be the same person. Okay. So I don't see that person. So I'll just do it a backward way. I'll go by the property address then. And then I type in 49 La Sierra Drive, Arcadia. So I have a couple people currently living there. I have someone named Chun Xiao who lives there at age 52.
Mhm.
I have a Xiao Shangjiang, and
Uh-huh.
that person matches. Yes, that's Xiao Shangjiang and a Chun Xiao. Oh, I just found husband and wife right now, right in front of you. There's a phone number right here,
Mhm.
and here's the
Okay.
phone number of the spouse right here.
Thank you.
Okay. If this number doesn't work, then try the one below it.
Sure. Thank you. Thank you. Yeah.
So it's not hard, guys. In the matter of a few minutes, I took any expired and I showed you how to get their contact info for you to call. Again, you got to filter the do not call list. You got to, come with an approach. Don't just sound like a robot with a blank generic script. Talk about what you've identified from the property. I noticed you did this. I noticed that you didn't talk about something, or the photography was missing something, or the marketing was not as strong as what I would do. And then I go ahead and try to book an appointment. Okay, guys? So go out there, attack expireds. Like I already told you months ago, we're going to see more expireds because a lot of these people are too stubborn. They fixated on a price that was a 6 month ago price, but these sellers need someone else to give them an independent understanding that the market is much different than it was simply just 3-4 months ago. It's a different market. Let's do marketing strategy. Let me be the one to represent you. Okay, here's my proposal. Here's my plan. Here's my strategy. Talk to them. If you talk to 100 people in the next, from now till the next 3 days, you'll get one listing. Just depends on, or at least you'll get 1 or 2 appointments. Okay, and you should be able to close on these appointments because you're good. So if you're hungry, you want to be busy, you want your next listing, this is what you're going to be doing. Okay, work expireds. Enjoy your weekend. Happy 4th of July. Any other questions before we end today? All right, guys. Thank you guys for being here. Lastly, I'll just say one of the items during your initial call is, look, I understand you have a relationship or you have a friend in the business. They were helping you sell the property, but this is my script to you. Okay. Look, guys, seller one, I understand. I appreciate it. But here's a couple of things that I identified. One, your friend, you already gave them an opportunity. You listed them with Tim Smith and Jing Sun, but the problem is you gave them the opportunity during the peak period. They had 164 days on this market. You wasted your time with them. You honestly, that giving your listing to your friend or relative has cost you a lot of money, quite honestly, because back in January, the market was hot. You did a disfavor to yourself, or this agent improperly advised you that this price was too high. Okay. You probably should have updated it a little bit better, had better marketing, and got it sold January, February when there's low inventory. Okay. You never made a price reduction. This agent didn't even care to tell you the truth that nothing's going on. There's no activity. There's no showings. We should improve the marketing or improve the price. I would say something like this. Here's the new strategy. You want to go to over here. You want to move. You have a goal to sell this property. Here's something I would say. Well, how much do you owe on this property? Okay. And in this situation, I could provide them with a solution. Okay. This property owner closed for 2.25 million, 2013, around 2.3 million, right? I want to look at their financing. Look at here, guys. This doesn't have any financing recorded in 2013. This purchaser, this owner owns this all cash free and clear. You know what that tells me? I know what to do, seller. Here's what I will do. You own this property free and clear. How about this? If we write a new strategy in the MLS that you're going to offer seller financing, I might be able to hit that 2.6 goal or 2.5 goal because the borrowers today are going to be paying 80% financing of 2.3 million, whatever it is. It comes out to a high amount. Let's say $8,000 a month. Well, I can get a buyer once we get some activity and offers. Let's put it an attractive price. Let's price this 100,000 less than what you were asking. And then let's offer seller financing instead of 6.5% that they're going to get from their lender. Let's try to get you 4.25% or 4.5% interest. I can give them the price and give them the financing terms that makes it comparable to what they're willing to pay per month. And if you allow me to offer seller financing or portion of seller financing, we can negotiate terms better. But that's what a local agent could do. I can teach you there are different ways to make your money. You maybe don't make it on the sales price, but maybe I'll make it up on the financing terms. Maybe I'll charge a point or two. That way I can close that gap for maybe there's a buyer that really loved this home, but they weren't able to get conventional loan, but they were willing to pay it and maybe pay a higher premium and pay points when you offer seller financing. So anyway, I'm just taking one example of how I can make the price high, but give better terms on the financing, or make the price low and I'll get better terms on the financing at the end of 10-year loan or 20-year loan, whatever I want to negotiate out with that seller. It's very, very important in today's age to understand creative financing, because that's how you can get deals to close that gap. So many people say, oh, they didn't get approved for the loan, let's cancel. Maybe the seller doesn't want to cancel and the buyer doesn't want to cancel. Sure, the lender doesn't have a solution for them, but then you can creatively package financing in a different way to save that deal. So just want to leave you with that last piece of advice. And hopefully this teaches you another tactic to save your deals or to get yourself your foot in the door, because you know how to do some homework and do some analysis on financing. All right, guys. Hope that helps. Enjoy the 4th of July weekend, guys. Bye-bye.
Thank you very much, Kevin.
Thank you for staying to the end.
Thank you. Bye-bye.
Okay.